When a business needs to move a large amount of money, say a 6- or 7-figure payment to a supplier, or the funds for a deal, the stakes are completely different from paying a small invoice. Because at that size, just a single mistake or a single fraudster can make the money completely vanish. And often, there's no getting it back. So let's walk through how businesses actually move large sums safely and securely. Because it's much less about fancy technology than you'd think. First, the methods. For big, time-sensitive payments, businesses mostly use wire transfers. A wire moves fast, often same day, and it's final, which is exactly what makes it useful, and exactly what makes it dangerous. Once a wire lands, it's gone. There's no undo button. Now, for recurring or less urgent payments, businesses lean on ACH. ACH is cheaper and moves in batches, but it is slower. The choice between them usually comes down to speed versus cost. But for large amounts, the real conversation isn't which payment method you use, but rather the controls you wrap around it. And that's the part that actually matters. Here's the single biggest threat you need to understand. It's not hackers breaking into the bank. It's something called business email compromise. It works like this. A fraudster impersonates a vendor or an executive, sends what looks like a completely legitimate email with new payment instructions, and the business wires a large sum straight to the criminal's account. Unfortunately, it happens constantly. It costs businesses enormous amounts every year and has only gotten worse. And it works because it targets people and process, not technology. So how do businesses defend against that? The truth is simple, with process, not gadgets. Now, let me give you the controls that actually protect large payments. The first, and most important, is dual authorization, also called dual control. No single person can or should ever send a large payment alone. One person sets it up, and a second person has to approve it. That one rule alone stops many fraud attempts and costly mistakes, because a single compromised email or a single bad actor isn't enough. The second is callback verification. Before sending a large wire to a new account, someone at the business calls the recipient, at a phone number they already know, not one from the email, and confirms the account details out loud verbally. This is one of the strongest defenses against business email compromise, because it catches fake instructions before the money moves. The third is separation of duties. The person who adds a new payee to the system shouldn't be the same person who approves paying them. Splitting those roles means no one person can quietly set up and pay a fraudulent account. And on top of those, businesses use bank tools like Positive Pay, which checks payments against an approved list, and approval thresholds, where anything above a certain size needs extra sign-off. This is exactly why banks offer treasury and cash management services in the first place. They're selling the controls to minimize any risk, not just the ability to send money. So here's the honest takeaway. Moving large money safely almost never comes down to the tool. It comes down to the discipline around the tool. 2 sets of eyes on every big payment. Verifying the recipient by voice before you send. And never, ever trusting payment instructions that showed up only in an email. The businesses that lose large sums almost always had a process gap, not a technology failure. Get the process right, and the money moves safely.